Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Aussie versus US dollar, so sit tight. For this analysis, I'm going to look at the 4-hour chart, and in particular, I want you to take a look at this box right through here. This red box right here define the trading range over a long period of time, going back to mid-February or the second half of February. During that time, we saw lots of moves to the upside and to the downside. The market initially moved to the downside and then back to the upside, and then back to the downside, and then higher through here, so on and so forth, all the way back down to our lows, back to our the high price. And in trading last week, what do? We saw the price extend outside of this red box for the first time since, well, going back to March. And the break outside of that box increased the bearish bias for this pair. And from a technical perspective, what do we have to go on right now? And that is, and what we have to go on is stay outside the red box and the sellers remain more in control. If we move back into the box, then this break below this area right here outside of the red box fails. Now what we've seen in trading here today is that the price did move up toward that box right through here, toward the low of that box, near the 0.6564 level up to 0.6572. That's going to be our risk defining level for traders. As long as the price can remain below that level, that area, the sellers remain more in control. If we move back above that level, then we're back into the red box, and we got to say, hey, this break failed. So it's really up to the sellers against the 0.6564 to 72 area. As long as the price can remain below that level, the sellers remain more in control. We can look for further downside momentum with the low from last week at 0.64898 as the first target to get to and through. If we're able to get below that level, that would increase the bearish bias. Let's take a look at the daily chart to see where we stand in respect to that low right here. And if we look at this chart, you could see that the break last week not only moved below that red box, but we also fell below this swing area, going back even further in time to these highs right through here, where the market fell below this level, came up, retraced to this area, and then fell off. And then we revisited these lows right here before breaking to the upside. And then we formed a floor ahead of those lows here, and before last week, the market moved below that area. So we have retraced back into that yellow area, but we are back below that level now in trading here today, and the bias remains more to the downside. Where can we go? Really, there's not a lot of support. It gets really choppy through here with lots of ups and downs, but this low right here would be a target. Also, this swing area through here, where we had a swing low and another swing low and some swing highs through here. It should be in yellow, but you can see the point of why that area is important, down to 63.48 to 63.66. That's still around, less than 150 pips to the downside here. But you can see that if the price can remain below this area right through here, this yellow area, and below the red box on our 4-hour chart, the sellers remain in control. And you never know how far this market can go. It certainly has the bearish bias. My name is Greg Mikulowski. I hope you learned from this video. Good fortune with your trading. Bye-bye now.